My name is Margus, and I lead the trading department at Fastflow Finance. Today, I would like to discuss a topic that, in my opinion, receives far less attention than it deserves: liquidity. When people talk about financial markets, they usually focus on prices, they focus on growth, on volatility, on headlines, on the assets themselves. But behind every successful financial market, there is something far more important: liquidity. This concept is fundamental to every market. In simple terms, liquidity is what allows capital to move efficiently. It is what allows buyers and sellers to meet. It is what allows transactions to happen smoothly. And it is one of the main reasons why some markets attract capital while others struggle to grow. The reality is that liquidity is often invisible to the average participant. Most people only notice it when it disappears, when spreads become wider, when execution becomes slower, when volatility increases, or when large transactions suddenly become difficult to execute. That is when people begin to understand how important liquidity really is. Professional market participants understand this very well. In fact, many institutional investors evaluate liquidity before they evaluate opportunity, because no matter how attractive an asset may appear, capital needs an efficient environment in which to operate. Without liquidity, growth becomes difficult. Without liquidity, efficiency declines. Without liquidity, markets cannot scale. And this is one of the reasons why infrastructure matters so much. When we look at the evolution of financial markets throughout history, one pattern appears repeatedly. Markets grow as infrastructure improves, markets mature as liquidity expands, markets become more attractive as participation increases, and the digital asset industry is no exception. Over the last several years, we have witnessed significant progress. More participants, more capital, more sophisticated trading systems, more professional infrastructure, and more institutional attention. All of these developments contribute to one important outcome: the continued improvement of liquidity across the ecosystem. This matters because liquidity is not simply a trading concept, it is a market health indicator. It reflects confidence, it reflects participation, and it reflects the overall maturity of an industry. When liquidity grows, opportunities grow. When liquidity grows, efficiency improves. When liquidity grows, markets become more accessible to a wider range of participants. That is why many of the largest financial institutions in the world dedicate enormous resources to understanding and managing liquidity, because they understand that liquidity is not just supporting the market. In many ways, it is the market. At Fastflow Finance, we pay close attention to these dynamics, because we believe the future of digital assets will not be defined solely by innovation. It will also be defined by infrastructure, by efficiency, by accessibility, and by the ability of capital to move freely and effectively through increasingly sophisticated financial ecosystems. The industry continues to evolve, technology continues to improve, new opportunities continue to emerge. But beneath all of these developments, the same principle remains true. Strong markets require strong foundations, and liquidity is one of the most important foundations any market can have. As the digital asset industry continues to mature, I believe liquidity will become even more important than it is today. Not only for traders, not only for institutions, but for the long-term development of the entire financial ecosystem. Thank you for your time, and I look forward to seeing you in future discussions where we will continue exploring the forces shaping the future of finance.